How are cryptocurrency assets taxed? Good morning, everyone. Welcome to Coffee with Carlson. All right, guys, welcome to the show today. I hope you're enjoying your nice, warm cup of strangely warm coffee. As the weather has gone, temperatures have gone down. The weather's beautiful outside. I hope you're enjoying getting outside and having some fun. Out today to our customer, Current Electric. Give James and Jessica a call if you need anything electrical. They'll hook you up and help you out. Thank you so much for being part of the Carlson accounting family. We appreciate you very much. All right, let's dive right in. So this video is going to assume that you already know what cryptocurrencies are and how they work. What I wanted to talk about just a little bit was how and why would you report it on your tax return and what events would trigger that. So I'm going to start off by saying that about 2 years ago, the IRS started asking a question that says, did you buy, sell, or trade any cryptocurrency? Did you buy, sell, or trade any cryptocurrencies? And you have to check a box on your tax return stating yes or no. Hasn't been a whole lot of information tracking on that, but if you check no and you actually owned cryptocurrency, I mean, you didn't disclose it to your tax preparer or to yourself, you could get yourself in trouble with potential tax evasion. This year, we're going to be taking steps in our office to make sure that each client checks that box and initials to make sure that we know that they're telling us that they had no crypto assets, so that we're reporting the proper information and we're reporting the information that you need to have on your file with the Internal Revenue Service. There are three main transactions that would trigger a tax reporting situation of cryptocurrency assets. From the IRS perspective, cryptocurrencies are not considered currencies. They're actually considered property, kind of like a stock or a stock or bond. As such, you could be hit for taxes on certain transactions that would be, under normal circumstances, treated the same way under one of those scenarios. The first one is if you're mining cryptocurrency. Now, a lot of people think that I'm not selling cryptocurrency, I'm just getting cryptocurrency. But in essence, what you're doing is earning that income. So as your computer runs in the background mining cryptocurrency, you're collecting some. And I think I talked about this in a previous show, but basically mining is the process of allowing your computer to become part of the decentralized computing system that is cryptocurrency. And in exchange for using your computing power, you get paid. That process is called mining. It's just like running any other business for a profit. As you receive profits throughout the day, week, month, you're going to have to recognize those at whatever the fair market value was when you earned them. So if you earned 2 Ethereum yesterday by mining, you probably have about $8,000 worth of reportable income to make. And it's very important that you don't have to sell, trade, or transfer those currencies, the coins, in order for it to be a taxable transaction. And you're going to have to report it on your tax return. So expect more questions, especially if you said yes to your tax preparer that you did buy, sell, or trade cryptocurrencies last year or earn them, then you're going to get some more questions from us. It's not us trying to dig into your business so much as it's us trying to make sure that you're protected and that the proper information is reported to the IRS. The second transaction that's going to trigger cryptocurrency reporting is if you sell those cryptos that you either bought or mined. So once you hold them in your wallet, and you then sell them, there are a lot of people doing this right now, and they might not realize the tax liability that they could be generating for themselves. So what happens when you buy or sell an asset like a crypto coin, you're realizing short-term or long-term capital gains. You only get the favored treatment if you hold it more than 12 months. There are a lot of people I know right now who are buying and selling cryptocurrencies every day. You could make a lot of money that way because some of them do fluctuate, say, from, I don't know, 8 cents a coin to 12 cents a coin. So you sell them at 12, hope it goes back down to 8 and you buy some more, right? Those transactions, that particular transaction would end up costing you short-term capital gains rates if it's bought and sold within less than a 12-month period. Those rates could be pretty high depending on the amount and volume of cryptocurrency that you get. So even if you're in a 10 or 15% tax bracket, meaning you're making around $40,000 or $50,000 total, if you end up buying and selling cryptocurrencies, by the end of the year, you could end up with a pretty healthy tax liability that you might not realize you're going to owe right now, because most crypto exchanges do report that information to the Internal Revenue Service. You can be sure that Coinbase, Robinhood, Kraken, some of those definitely are reporting the information to the Internal Revenue. Now, some of the other wallets that are sitting out there, Trust Wallet, some of the others, they might not be able to put those transactions there. But if you get caught and you made a huge profit, you might get into trouble. I generally look at investments as long-term opportunities for me. So I want to try and invest in things that are going to grow. That way you can also take advantage of the lower long-term capital gains rates if you buy it or earn it and sell it after a 12-month period. Just something to think about, and try to hedge at least the tax bill so that you know what it's going to be at the end of the year. A good rule of thumb is at least 25% of your profits. And I've watched someone who has $1,000 turn that $1,000 into a lot more profits by the end of the year. So really keep a close eye on what your total realized gain is for the year and whether it's short-term or long-term. Depending on the wallet type you're using, you might have to do a lot of those calculations manually. There are some tools out there that'll help you, but it could be a cumbersome process by the end of the year. And if you bring that documentation to us, it could be an expensive process for us to go through it and figure it out for you. So some coins you cannot buy through the big exchanges like Robinhood or Coinbase. You have to use those other wallets out there. So just remember that you have to keep track of that and report it to the IRS. The third trigger, and this is the one that probably a lot of people don't really realize that they're going to get hit with, is if you have crypto and you're holding it in your crypto wallet and you spend it on something. There are several examples out there, and there are a lot of vendors that are starting to accept cryptocurrency as payment now. But think about this. If you had Bitcoin pre-2014, maybe you have a bunch of coins for very, very low basis. Let's just assume for argument's sake that you had some from 2012 and your basis was $1 a coin. Well, now those are trading in the $60,000 range. So you want to go buy a new car. And you choose to buy a Tesla because you can pay Tesla with Bitcoin. At least you could. I'm not sure if they shut that down or not, but you can pay them. You can pay them with Bitcoin, but you're going to realize in that scenario I just gave you, a over $60,000 long-term gain. Long-term gain rate, maximum rate is 20%. So you could take a $12,000 tax hit by using the crypto to purchase something like a Tesla or anything else. So that's very important to know. There was a show I remember about 10 years ago, maybe, where someone was trying to see if they could travel the world only using Bitcoin to pay for their trip. That's okay, but every time you use the Bitcoin to pay for something, you're triggering a sale transaction, meaning that it's just like you bought the Bitcoin and then you sold the Bitcoin. Even though you're exchanging it for something else, you're still going to have a realized gain transaction that you're going to have to track and capture by the end of the year. So again, depending on the wallet that you're using and how you're spending it, could become a big reporting nightmare for you at the end of the year. So as healthy as those other wallets are, try to use one that you can pull the data from and track it very well. Otherwise, you're going to have to figure out a manual way to do it. That could be cumbersome, but we're here to help if you need help doing it. Cryptocurrencies seem to be the hot market these days. Lots of people buying and selling, lots of speculation going on. Most of the speculation actually is just centered around the profit motive related to crypto coins and not the underlying market that they're creating behind the scenes, the borrowing market, the decentralized computing market. There's a lot of things out there that are really moving forward in the crypto world. If you're in that market and you're just trying to get a short-term profit, it might not be as important to you, but I recommend trying to study it. As with any investments, study them as closely as you can to try and figure out exactly what your goals are and how you're going to reach them through that market. And always be careful when you're playing with something so speculative that it could be worth $100 today and could be worth $0 tomorrow. So only put in money that you don't mind losing. Don't put in your 3 months worth of savings or 6 months worth of savings that you have. Not a good idea to put that into crypto. That's going to do it for this episode of Coffee with Carlson. I'm going to try and do more episodes on crypto as the topics come up. I have been asked by a few viewers to get into the market a little bit more and talk a little bit more about it. So I'll work on that. I hope you have a fantastic week this week and a great morning today. Don't forget to enjoy your strangely warm coffee. If you need to get in touch with us, you can reach us anytime at 863-382-4141. Check us out on the web at carlsonaccounting.com. You can even schedule an appointment for me right there on my webpage. You just click the button at the top that says appointments. All right. Hope you have a great week. Thank you again, and we'll see you next week on Coffee with Carl.